Always a delight to come your way with the very latest in the world of business. I am Pius Kojobaka. The World Bank Board is set to meet next month to approve some $250 million for Ghana to help support the recovery of the financial sector. This will be targeted at the banks and other financial institutions hit by the domestic debt exchange program. The funding will be part of the World Bank Support for Ghana Financial Stability Fund. Senior economist at the World Bank Group, David Emele, says they are committed to supporting Ghana's economic recovery.
The World Bank is really engaged day-to-day in Ghana to support the government and other partners, to achieve this mission of reducing poverty on the global planet. So there is this series of budget support loans that I have mentioned. There is the operation to support the stability of the financial sector, but the bank is currently engaged and will engage in many more areas. Just to mention a few, the bank is also preparing a dedicated operation to support the energy sector and its financial viability. There are operations to support MSMEs, small businesses, help them thrive and develop and grow bigger and generate jobs. And there are projects to help the social protection, to finance the social protection programs, notably LEAP, school feeding, and there are more in preparation in education, etc.
And will this come with some additional financial support in the area of the energy, the MSME, and of course, as what you spoke about right now?
So the bank provides a mix of funding and technical assistance, but yes, some of those operations are already coming, such as the MSMEs with funding, and some of the extra ones could include additional funding as well.
Do you expect this to trigger other donor support or other donor partners to also come on board and support in the recovery of Ghana's economy? Because some will say that with the bank coming on board and the IMF, you have the risk or the concerns people have with the economy, and then Ghana being on a fund program as well. There are mechanisms in place to ensure that Ghana stays on track when it comes to fiscal prudence and fiscal responsibility. Are you expecting other donors to also follow the World Bank's suit or the line that you've told?
So I cannot speak for other donors, but what I can say is that the fact that the World Bank approved this operation yesterday, that the World Bank Board approved this operation yesterday, is in fact a recognition of the reform program that has been enacted by the government, and the fact that it's starting to bear fruits. In addition, that financing and the reforms that we've supported will help further advance those reforms and stabilize Ghana. So we do hope that is going to create confidence in the country, and that could attract the support of other partners.
Let's now get onto Zoom and speak to Senior Finance Lecturer at the University of Ghana Business School, Dr. Benjamin Amwa. Dr. Amwa, good to see you once again. Now, how significant will this $250 million from the World Bank be to help support the recovery of the financial sector, you would say?
The $250 million is part of the $750 million initial funds needed to kickstart the support to the financial as a result of the domestic debt. So if we are having $250 million from the World Bank, it's expected to contribute $1 million to kickstart this whole stability fund initiative. And so if you are using the $250 million as the only funding that has come in so far, they can clearly say that it is not enough. We should also not forget that this solvency window from the World Bank will go into basically three areas. The first area is to help recapitalize qualifying banks, SDIs, companies under Securities and Exchange Commission, National Insurance Commission, and allied financial institutions. Then the second component is on technical assistance, and then finally monitoring and evaluation that will go to Ministry of Finance. And so we need a lot more from the government of Ghana. I don't know how much the government of Ghana has contributed, but if you are working with these 250 million out of the initial $750 million needed, then we have a long way to go.
And that's what I'm really curious to know. How do we make up for that impact or the loss the exchange program has had on the financial sector vis-a-vis the money that has come in through so far from the World Bank? How do we make up for that? Knowing very well that we aren't doing well when it comes to revenue mobilization.
Yeah, you are right. Your concerns are justified, because if you look at the fact that these qualifying institutions will use the funds to recapitalize, so it will affect their tier 1 capital. The difference government of Ghana must provide. And so if government of Ghana is not able to provide the needed support, don't forget, this is just the initial estimate. So it is all possible that it will be more than $750 million US. And so we need to get a lot more from the government of Ghana. And must see a lot more commitment from the government if we really, really want to support the financial services sector and to make it stable, so that if we have an additional shock tomorrow, next month, next year, the financial services sector will be resilient enough to absorb the shock. Don't forget, we have come from COVID. Not too long ago from COVID, then today we are talking about domestic debt testing program. So it's about building the needed shock absorbers. And that is why we have the Financial Stability Fund. And so government of Ghana must commit and also contribute its portion to the fund.
And when you talk about commitment, help me understand what exactly you mean. Are you looking at government, being careful at the expenditure level?
No, if you look at the Stability Fund, the idea was that World Bank will contribute into what is called Fund A. And Fund A is basically a solvency fund, simply put, so that the banks will survive and will not go bankrupt. That's Fund A. And then Fund B is for liquidity support. So if you look at the share in the fund, the World Bank promised to give $250 million. And that is what we are seeing today as having been approved. The government of Ghana in that arrangement is to provide $500 million for liquidity. So it is not about government of Ghana cutting down expense. Of course, as a strategy, they may want to cut down on expense, but whatever gains they make, they must commit and pay into the Stability Fund, because if there should be a shock tomorrow, you cannot tell government of Ghana, go and cut down on expense to mobilize resources to come and support the shock in terms of resilience. You must have the funds available, because these shocks will not announce themselves ahead of time. And so if you are having a system to hold the shocks, then the funds must be available. That is what it means. So government of Ghana must make the funds available.
And so far, you've been monitoring the terrain very well. Do you think government has shown that commitment?
That's a difficult one for me to say. Government of Ghana reached that agreement with the World Bank. And so if the World Bank is making due its part of the bargain, it is just fair for the government of Ghana to show commitment. You are in trouble and they are coming to assist you. So you should show a lot of commitment by also contributing your quota to the fund. And so government of Ghana will have no option than to show the needed commitment. Don't forget, this is also a credit facility. So what it means is that at a point in time, we will have to pay back. Definitely, government of Ghana have no option than to show interest. Like they say, half a loaf is better than none. The 250, although it's not enough, it's a good starting point for us. Our government must also contribute its part.
Very well. Thank you so much, Dr. Benjamin Amoah. Always a delight to have you on Business Live. Indeed, grateful and insightful indeed. Let's move on to some other stories. The Private Enterprise Federation is casting doubts over projection the current challenge facing the economy will be over soon. Several data from the IMF and the World Bank have forecast that things will firmly stabilize from next year. But Chief Executive of the Private Enterprise Federation, Nana Sebonso, does not share in this optimism by these institutions.
I can only see light if I see policy directives that are changing our investment decisions, in the sense that if we are not going to empower our domestic private sector, there's no way that we're going to yield the volume of resources needed to invest in our infrastructure. Wait for IMF to say that there's light at the end of the tunnel.
We are in their program now. We are in their fund program now.
I don't know.
I don't know whether you thought that was the way we should have gone. We are in the IMF program now.
Yes, what I'm saying is I don't know what kind of binoculars the IMF is using to see the...
But they are seeing the economy is turning around. We are seeing signs of stability. Is the private sector seeing a different thing?
Well, I don't see what the IMF sees.
Signs of stability in the economy. They think that there's been a correction. We're going to grow more than expected. Inflation is going to come down. You think that are they talking? If they singing jazz?
And that's what I'm saying is I don't see the empirical data that they're utilizing to analyze.
Inflation is coming down from 52 to about 25%.
Right.
You don't think inflation is coming down?
Oh, no.
Growth from about 1 point something to about... I mean, this is what they are saying. And
this is what they're saying. What my people are telling me, the cost of money is too high. And if the cost of money is too high for them, they increase the pricing of their products. And if they increase the pricing of their products, the consumer is going to bear the cost of that. And what happens? So if the private sector, I said, doesn't make money, then they will not pay the taxes because there will be no profit margins to pay taxes on. And the government's revenue accumulation is going to be lowered. And the government's ability to prosecute its agenda is going to vanish.
And we want to talk trade matters now because government statistician Professor Samuel Kobnenim has revealed that China has emerged as the main source of imports to Ghana, contributing 10.5 billion cedis, which accounts for 21.8% of total imports. This information was disclosed at the launch of the 2024 first quarter trade report here in Accra.
Trade relationship between Ghana and the European Union remains robust as of 2023. However, there has been a notable increase in trade volume with Asia, particularly China. Chief Government Statistician Professor Samuel Enim attributes this shift to global economic uncertainties.
In the case of imports, we did only 9 billion Ghana cedis change between 2022 and 2023, whereas we did 19.3 billion Ghana cedis change between 2022 and 2023. About a 10.3 billion Ghana cedis difference between the rate of changes from an import perspective between 2022 and 2023. So we saw a much higher change for the imports that are coming from Asia to the tune of 19.3 billion Ghana cedis. This has led to a swap in terms of the continent that is leading from the perspective of imports. From the perspective of imports, it was more from Europe, and in recent times, since the second quarter of 2023, we've seen a turnaround of this, and now Asia is the lead in terms of imports.
Professor Samuel Enim explained that Ghana experienced increases in exports to Asia and Europe.
Realize that exports to Europe was 13.7 billion Ghana cedis, and that of Asia was 16.0 billion Ghana cedis in terms of changes between 2022 and 2023. Between 2022 and 2023, we had an increase in our exports to Europe going up by 13.7 billion Ghana cedis. Between 2022 and 2023, the same time period, our exports to Asia increased by 16 billion Ghana cedis. What this is telling us is that although our exports are going up, our exports to different continents are at different rates. And this is very important, especially because of different global crises that are happening at different parts of the world and how we take advantage of that.
He further warned policymakers to assess the risks associated with becoming an import-reliant nation.
The gap between the number of countries that we are exporting to, which is 159, and the number of countries that we are importing from, which is 214. And the whole argument is that if you are importing from a lot more countries, it points to the vulnerabilities that are associated with the number of countries that you are importing from, because you are relying on a lot more countries for different types of products. So all that it means that if any economic challenges affect, or any health challenges affect, or any political challenges affect either of these countries, the rippling effect is going to come through.
A new key player in Ghana's export destinations for 2023 is the United Arab Emirates, with gold comprising of 97.3% of the total export.
Let's understand the dynamics here, and we've been joined via Zoom by the president of the Ghana Union of Traders Association, Dr. Joseph Obeng. Thanks so much, Dr. Obeng. Now, I want to understand what is accounting for the sudden shift from Europe to Asia when it comes to imports. What can you tell me? What are you gathering?
The drift started about 3 decades ago, where people started shifting to the Asia, predominantly the China in particular. And this is because the European countries, most of them, I'm talking about import, were overpricing what they call quality. And then, this thing started when Japan started industrializing. They started with the electronics and all that. And then we saw that there are a lot of things coming from that corridor. So people started buying the electronics from Japan. Later, China set in, and they started producing. Initially, it was deemed to be of inferior quality, but with time, the quality have so improved. And we have also observed that most of these European countries were buying, were doing OEM with the Chinese companies. So they go to China, make their brand, and then we were buying from them. So when we started going to fairs and all that, we saw that they were buying also from China. And that's where we had the confidence and started shifting from Europe and then apply our trade in Asia. And then we have gone far to the extent that now, apart from China, people are buying from India, we are buying from Turkey. Turkey is also a very preferred destination of doing business. That's when it comes to import. And then also Dubai. But Dubai is a trading hub, it's not a manufacturing hub. The reason why we go to Dubai is that they buy from they trade with so many countries and bring the goods there. And so we go and buy the goods and then have a quick shipment and it serves our interest. So you see that the volume of import now is now concentrated in these Asian countries. And their quality is very good, and their pricing is also affordable for economies in Africa. And in this particular case, we're talking about Ghana, yes.
I see. So it appears quality is what supersedes everything, really, when it comes to import to Ghana, really. And that's the main reason why you intend focusing on China, right?
Yeah, it's quality, but affordable. So you do not have to overprice quality. Because we were colonized by the British, we used to prefer British goods. And until recently, everything that came from Britain were deemed to be of much quality. But these days, we've seen that most of the goods they also buy from China, of course, and they do it for more quality according to their standards. And we also do the same standards. Because when we go to the fairs and all that, we meet these suppliers from Europe, in Asia, be it Turkey, India, or China. And we are all buying mostly from this destination. Yeah, it will surprise you to know that when you go to UK or, for that matter, any country in Europe, most of the things that you buy from their supermarkets and are also procured from the Asian countries, especially China, to that corridor. So we are not different also from them. And that's why, because the only thing that they were very predominantly producing lately, and then people were still not accepting the Asian ones were automobile. Okay. The automobile was very predominant in this area. But mind you, once the people are now started shifting the demand towards electric cars, China may take over even the automobile because they are leading the electric cars these days. So when they take over at this stage too, then you see that the volume of trade in Europe will also go down, because now the electric car in China, supersede all other countries.
Thank you so much, Dr. Obeng, for helping us understand these dynamics pretty well. We are indeed grateful, Dr. Obeng. He is the president of GUTA. You're still watching Business Live. We'll be right back with more. Please stay. Thanks so much for staying on. I am Pius Kojo Baka. Now, government has reiterated its plan to improve the aquaculture industry. According to Deputy Minister for Fisheries and Aquaculture Development, Musa Abdulaziz Ayaba, government is working to increase the annual income of fish farm from $186 million to $436 million by 2028 under the Ghana National Aquaculture Development Plan. He spoke at the Aquaculture event 2024.
The Chamber of Aquaculture Ghana and its partners organized the second edition of the Aquaculture event. The two-day event comprises a conference, exhibition, and awards ceremony. Speaking at the first day of the event, Deputy Minister for Fisheries and Aquaculture Development, Musa Abdulaziz Ayaba, outlined a 4-year plan by the ministry to revolutionize the industry.
The ministry have prioritized the implementation of this plan to achieve the following outputs. 1, increase the commercial output of farm fish from about 88,000 metric tons in 2021 to 216,000 metric tons in 2028. 2, increase the market share of commercially farmed fish from 14% in 2020 to 30% in 2028, and the value of farm fish output per annum from 186 million USD in 2020 to 436 million USD in 2028.
FAO Regional Fisheries Officer Dr. Gui Indiaga outlined some challenges in the sector and how they can be addressed.
African governments, like here in Ghana, has been increasing their financial commitment to aquaculture and seeking private sector investment. Adoption of new technology also in the transforming sector is essential. Partnership and collaboration has already paved the way for the current status of aquaculture in our countries. But we need more of this collaboration to enhance programmatic skills and ensure coherent aquaculture sector growth in our continent.
Chief Executive Officer of the Chamber of Aquaculture, Jacob Ajika, highlighted the goal of the aquaculture event.
And that's our part company here on Business Live with me, Pius Kojo Baka. For more stories, feel free, do log on to myjoyonline.com/business. More stories on that portal. World Bank approves $250 million to strengthen Ghana's financial sector. Also on that portal, businesses adopting strategies to lessen tax obligations. That's according to PEF CEO Nana Sebon. So there are more stories when you visit myjoyonline.com/business. Thanks so much for watching. Let's connect next week. Bye.